Hi, everyone. We're back. And Shenoah, if you could stop sharing for just a moment, I think. Thank you. We're back, and Shenoah is going to start in just a moment. But in the meantime, I just want to share with you one of the ways that Real Estate IQ can help you with your business. So one of our tools that we're most proud of, and that was actually what started our company at the beginning, is our Fast CMA. And this lets our computer automation run comps for you. So it makes it super fast and easy for you to find out what that property's really worth or what it's going to be worth after you fix it up. So you don't have to go to a realtor to get that information, which in Texas is the only way you can get sold property data information right now. So our Fast CMA can give you all that information that you want. It's super fast and easy to use. So if you are just starting out and looking at deals from wholesalers, or if you are a lender, even, you're going to need to run comps. And so you can start off with these comps as part of our deal analysis suite for just $19 a month for one metro area, or $39 a month for all of the state of Texas. And if you want to give it a try, you can use promo code REIQ10 to get a special 10% discount on that just because you are here today. So I'll put the link and that promo code in the chat for you as well, but you can sign up for that. Or if you'd like to learn more, we can also give you a free demo with that. So just you could just put demo please in the chat and we can get your information, or the link to the demo, I think she might put there also. All right. So with that, I'd like to introduce to you Shenoah Grove. Shenoah became a full-time investor in 2004. She owns and operates Texas REIAs, which is Texas' largest association of real estate investors, with monthly meetings in Austin, Dallas, Houston, and San Antonio, where hundreds of members, guests, and vendors attend. So with that, Shenoah, thank you very much. You may take over. Actually, I have to stop sharing first. And you can give us your market update. Tell us what's going on.
Awesome. Well, first off, just want to say hello to everybody. Good to see all of you investors on today. What a perfect day to get real estate training, real estate knowledge, and definitely the opportunity to network. So excited to be here as part of Texas REIAs. Excited to be here to join you guys and share with you all what I'm seeing in the market right now and some of the different opportunities that have come up as of late, as we're all working through this disruption, as we're all pivoting our business. And what I've found is we have to pivot more and more and more as we work through this disruption. There's an old saying that never let a good crisis go to waste, and we'll certainly share with you guys some of the different ways that you can make sure to not let this current, what I call an upside down market, go to waste. So as part of Texas REIAs, our group has been meeting with investors, over 87,000 investors, members, guests, vendors, sponsors, just supporters have walked through the door of Texas REIAs. We have meetings in Austin, Houston, Dallas, Fort Worth, and San Antonio. And through this disruption, we've been meeting live and online, but in June, we're going to be meeting live and in person again. So love to have you guys join us. Love to have you guys be part of this network. It's your opportunity to meet other people that have been doing it for a long time, get some live networking in as we start in June, and really just either build your real estate investing business, get started with your investing business, or even just make some little pivots and tweaks. So for us, our first deal I did was in 2003, went full-time in 2004. But the first thing that I did as part of my investing path was I walked into a local real estate investor association to meet and network with other people. And it was there that I got the contacts, the contracts, and the contractors that I needed to be successful as a real estate investor. So if it were not for that first investor association, if it were not for that first group of people who are willing to kind of open up the kimono and share with me what they've done, share with me some of those best practices and what I call the tribal knowledge, I would not be where I am today as a real estate investor. And for me, I have not had to update my resume since 2003. So at this point, my resume is in some version of DOS that even the techiest of the techie people that are figured out 𝗏𝗵𝗲cie to be on this call today could not unwind. And I wouldn't want you to, because I love what I do as a real estate investor, as a real estate professional. And I love what I do in terms of being able to help others make that same leap into investing, or help them pivot their business if they've gotten to a plateau and they want to look for scale. So leading the Investor Association is part of my giving back or paying it forward, and it pays me really well because it gives me the opportunity to meet and network with other investors, share tribal knowledge, find deals, find funding, find new strategies and new techniques like what Max even shared with you earlier today, and so many of the other speakers are going to be sharing with you as you work through this meeting today. So very excited to be here. And of course, a big thank you to Real Estate IQ, who have taken the time to explore this new platform, taking the time to figure out new ways that we can be creative and network even while we're still at home. So, and of course, all of the great knowledge and information that Real Estate IQ shares with their members, right? Their clients, because as a real estate investor, you got to have data, and you got to have good data, and you got to have data that's fast and on time. And Real Estate IQ has really done so much to make sure that they're the leader when it comes to that, and have a real passion for it. So I'm excited to be here with you guys today and share that passion that they have as part of my investing business too. So a big hello again to everyone, all the real estate investors that are on. I'm going to go and pull up my presentation so you guys can get an idea of what I'm going to be talking about today. And I want to make sure you guys are aware of some of the different opportunities that you can use to invest in real estate, and some of the things that I've done over these many years in terms of different strategies, and just having knowledge to be able to create different opportunities for myself and all the other investors that I get to meet with. So I'll go ahead and put it in presentation mode. So just want to make sure you guys can see it okay, because I can't see you. But again, welcome to the meeting. This is the market update part of the meeting. And of course, I'll get to network with you guys later if you have any questions about the market, and any questions about what we're seeing and what you need to be doing today as a result of where we are in the market. So excited to be here. And of course, you guys can get more information about me at my personal website, shenoahgrove.com. Or if you want more information about real estate investing, you can always head over to askmeaboutinvesting.com, because love to work on your personal plan, your personal blueprint as you are either getting started in real estate or looking to make some little tweaks to be able to scale your business, and want to associate with people who have about 2 decades worth of real estate investing experience. So excited to be here, and excited to be able to share with you all today. And first off, obviously, we are in a very disrupted market right now. For myself, and I invest with my husband, Phil Grove, we've invested in every different part of the market cycle. Up market cycles, down market cycles, long sideways market cycle, or long sideways, flat, up again, and then what I'll call this market kind of an upside down market. So it's been a fun ride, and what has helped us not just survive but really thrive is just the fact that we have so many different strategies that we use as real estate investors to make sure that we know how to make money every single time we answer the phone. And that has always been our objective ever since we started investing, because we see so many people who will go down and look for a specific niche and then not be able maybe to generate as many of the leads that they want for that specific niche, and then find themselves kind of struggling. So for me, even though I advertise to a specific niche, I still want to make money every time the phone rings, and sometimes the phone rings in different ways, and you've got to be balanced and what I call asset class agnostic, strategy agnostic, to be able to make money every time that phone rings. So for us, we invest in single family, we invest in multifamily. Again, let's make money every time the phone rings. So write that down as your objective. So let's talk about this disrupted market, what I call this upside down market that we're in right now. It's obviously been a V-shaped recovery for single family. We had only 2 months where we were down in 2020, and that was April and May. But overall, 2020 year sales volume was 9.4% higher than what we saw in 2019. The forecast for 2021, I expect it to be up, and it's so far been up actually by over my forecast, by over 10%. I'm a little worried that we're going to have some trouble sustaining that pace just for one reason. And I'll ask you guys if you have some ideas about why it might be difficult for us to sustain that pace. If you want to type that into the chat, I'd love to hear what you guys have to say about it too. That way we can kind of make it a little interactive as we're here together. And then I'll tell you that our 2020 year-over-year sales price was 8.2% higher than what we saw in 2019, but my forecast for 2021 is way higher than that, through the roof, and expected to be up over 20% versus where we were in 2020. So I'll ask you guys if you wouldn't mind typing into the chat, hey, why might that be? Why might we see a disruption that would cause us to more than double our average price, as an example, but maybe keep flat our sales volume? So what might be the cause of that disruption? So I'll tell you what I think it is as we go through the presentation as well. And I'll also want to share with you, and I know this is an eye chart, but what we'll do is we'll make sure to get this eye chart out to you guys as a gift, my gift to you guys for all being here and sacrificing a little bit of your Saturday to be here, to be able to grow your knowledge, to be able to grow your wealth, to be able to grow your income, and to be able to grow your network. So this is something that my husband and I created several years ago, and it represents the 273 different things that we've learned about real estate investing since we started back in 2003. And we break it down into 6 different categories. Number 1, strategy. So I told you to consider being asset class and strategy agnostic. So for us, what does that mean? That means, again, we want to make money every time the phone rings. You got to have different strategies to be able to work with someone, to be able to both help them and help yourself as a real estate investor. So we talk about all the different strategies, or this blueprint talks about all the different strategies. It also talks about more than 65 different marketing channels that you can explore as a real estate investor. As much as I wish that there was one silver bullet that we could all use in real estate investing, the truth is that your silver bullets need to change as the market changes, right? And that's also your strategies need to change as the market changes. And this is your opportunity to be responsive to those changes. We also talk about sales and negotiation. We love what we call our sales scripts, the exactly what to say for the real estate investor professional. And we like to practice those and go over those and hone those, again, especially as the market's always changing. Analysis and due diligence, gosh, you got to make sure you know how to work the numbers. You got to make sure you understand how the real estate math works and how to create offers that both work for the person you're buying from as well as work for you and help you make money as a real estate investor. The financing part of the deal, so we have multiple different ways to be able to find financing, and some of those creative strategies have helped us make money with no money at all as real estate investors. And that's always a great skill to be able to have, and love sharing that process with folks who are interested in learning more about making money with no money, or even if you have money, just leveraging someone else's capital. And then the upper quadrant of this blueprint is what we call the operations side of the business, right? This is how you're ultimately going to grow. This is going from swinging a hammer in your own business to paying somebody else to swing that hammer for you, and what that looks like. So as one of our gifts to you guys for being here, and I'm so impressed that how many of you guys are here, and just want to reward you and to give you a copy of this blueprint. And of course, the copy that you'll have will be easier to read, but still there's just so much, and that's what you need to understand about real estate. It is a mile wide, not necessarily a mile deep, especially if you want to be flexible and nimble as the market is always changing. So the question I'd posed to you guys and asked you guys to respond back was, why is our inventory so low? Or why are we only forecasting a 10% increase in sales? We thought everyone was moving to Texas. Why are we forecasting such a huge increase in the average price? And that is because everyone is moving to Texas. And the reason is our inventory is so incredibly low. What do you guys think some of the factors are that are affecting us from an inventory standpoint that's causing our inventory to be so low? Well, I've identified at least 13 different reasons. So it's not just one of these things, but it's the combination of all of these things working together in this very disrupted environment that's causing us to have an inventory situation that's incredibly low, that's kind of the governor, if you will, on our ability to sell more houses. But it's certainly also, I guess I'll call it the anti-governor, if you will, that's allowed the housing prices to just grow incredibly fast. And I'll get to break down all of the major markets throughout Texas so you guys can get an idea of what that looks like for you all as well. And just want to go over some of the things that I've noticed over the past 15 months that have really had a huge effect on our inventory. Of course, there's uncertainty. So uncertainty typically paralyzes people, makes them not want to take chances, makes them not want to take risk. And in some cases has said, hey, we don't want to wait for the other shoe to drop. We want to make sure we still have a job. We want to make sure we still have a place to stay. We don't want to put our house on the market, whereas we would have at this stage in our life and our income and our wealth, at this stage in our family. We want to kind of put the brakes on it. And because we're not sure what's going to happen in the world yet. And lately we've seen everything obviously that's happening in the world. I think people are getting a little bit more comfortable, but people are also seeing that they still want to hold on to their properties a little bit longer than they maybe previously would have. So I think what we have all found over the last 15 months is our home is our sanctuary. And I think a lot of people have done a lot of projects to improve their home over the last 15 months and have decided to kind of enjoy it a little bit longer than they normal otherwise would. And then for people who are considering putting their houses on the market, the big question is, are the people who are coming into my house, are they healthy? Are the realtors healthy? Or do I have somebody with some type of a compromised immune system who lives with me, right, that I need to protect? So that's also caused people to kind of hold off on putting their properties on the market. I don't know about you guys, but just like today, I'm in a little bit of a stream of meetings, right? So will the buyers who are coming into the house interrupt my day, my child's day? I don't know if you guys have children. We have a munchkin who's 12, and sometimes he does remote schooling, right? But they're not easing up on them. They've been incredibly academically rigorous over the past year and a half in school, and still really pushing forward. He's getting quizzes and tests and exams and all sorts of stuff. So I can't tell him, hey, I've got some buyers coming over. I need you to pack up all your stuff and let's go to Starbucks, right? Because people aren't necessarily going there as much as they used to. And then, of course, I'm in meetings all day, and so is my husband. So how is the stream of buyers going to interrupt our day? Whereas before we might be at work or be able to go sit in a Starbucks all day as buyers are coming in and out. And then, of course, those low interest rates are motivating buyers to get into the market right now, even though the prices are going up. But it's also causing owners to refinance their houses, right? As you refinance your house, as you put money in, and there's this cognitive bias called the sunk cost fallacy, right? Where it's like, I feel like I got to make up that sunk cost. So I spent a lot of money maybe to refinance my house. I got to stay here at least long enough to be able to get that value of refinancing back to me. The last market cycle also changed how builders develop. So they're putting fewer houses on the market right now than what they were, for example, in the 2006, 7, and 8 timeframe. And then we also have an issue where we have a labor shortage due to immigration policies, due to border crossing insecurity that might stop would-be laborers and contractors from coming over. we have fewer people who are here to help us build our houses. And then we're also sending, and this is a little bit of a soapbox and an aside, but we're also sending more people to college right now. And some of these people maybe should be going to a trade or technical school where they can get a faster return on their education and a faster return on their time and money investment, and come out being an electrician, a plumber, a framer, foundation company. All of those things are in very high demand, and in some cases are actually paying more than a full year college degree. So some of those societal changes as well are affecting that labor shortage, which is also contributing to the fact that we have contributing to us having lower inventory. Prices have gone up. You literally can't go a day without seeing all of the price of lumber, and the framing costs have gone up so much for not just the materials, but also for the land, as people are asking higher prices for the land that they are looking to develop. City permitting, of course, and building codes make homes more expensive. I've got a sad story about a property that we did, for example, where the city told us that here's how you can, on your new builds, can tie into the city sewer line. We went to where they said it was, and it was not there. So they said, well, congratulations, you got to spend another $25,000 to be able to rebuild this whole thing. And that didn't feel fair. But city permitting is causing those prices to go up, and also taking a little bit longer to get those houses actually on the market. And when Elon Musk puts on a cowboy hat and says, I'm a Texan now, and you see all of these companies who are following him moving to Texas, all of the employees that are following him and moving to Texas, gosh, that's going to further decrease the amount of inventory that we have here. So that's causing more people to move here. And I think as we were in the shutdown over the course of the last year, some people even expedited their plans of moving south, right? And some of those big states that received a lot of people getting there a little bit earlier than maybe they originally thought. Texas, Florida, New Mexico, Arizona, Nevada are hitting the tops for some of those areas that people are moving to. And then you'll see a lot of owners who have their starter home and are saying, gosh, this is going up in value. I've got a low enough down payment. We've got enough money saved up. Let's keep this original home as a rental property, or even using the Airbnb strategy to be able to generate some additional income. And then did you know, guys, that you're competing against institutional buyers? About 170 homes were bought up last month in Conroe by an institutional buyer. And just last week, I was talking to a land developer who said probably one of the oddest things that I had ever heard or ever thought I would heard. But he said he's working with the Iceland pension fund. I'm reading from my notes right here. And they're buying $250 million worth of real estate in Austin. And I thought, I didn't know I was going to be competing against the Iceland pension fund and all of these other institutional buyers who are here in Texas looking for the opportunities because they see this as the next growth spot. And of course, you guys may or may not know, but Texas picked up 2 House of Representative seats this last population assessment time around, which 2 doesn't maybe sound like a lot, but it's a big deal. And California lost 1, and 1 doesn't sound like a lot, but again, it's a big deal. And it's predictive of what's coming as more people start to move here. So that's what we're seeing as well. And then of course, many houses are not going into foreclosure due to some of the government policies, foreclosure, moratorium, eviction moratorium, forbearance programs, and other sort of help that we had not previously seen in the market. If you look at what we saw in 2008, 2009, 2010, it was almost like it was a stampede to the foreclosure sale. And we're not in as bad of a position today as what we were about 13 years ago. They didn't think for a second to stop foreclosures or do any type of a moratorium. But in this disruption, and it doesn't feel like it is hitting us as hard as the last one, if you look at most of the metrics, but they're still not letting houses go into foreclosure, which would also create an additional stream of inventory for us. And I know it feels like this last bullet point, I know it feels like forever ago, as it's been raining all for the last several weeks. But before that, when it was in the 90s, we all kind of forgot about the snowstorm turned ice storm that removed a lot of properties off of the market as properties had to go through repairs, and also removed a lot of, we talk about labor and materials. We had some plumbers actually have to come out to our house, and they're like, we can't even get the copper to be able to make the repairs that we need. So all of these things, not just one, but it's like all these 13 things, and I know there are probably even more than that, but these are all the things that are coming together right now to create a very low inventory situation for us. And guys, I want to go through the April numbers, so just so you know where we are, and we'll go through starting with Texas, and then we'll break down 4 of the major markets throughout Texas. So last month, the sales prices were up 36% year over year. Now, to be clear, we're comparing April of 2021 versus April of 2020. So we did see a precipitous drop in the number of sales in April of 2020, obviously because we were shut down. Now, even though real estate was considered one of the businesses that could continue to go, we still saw sales go down. So some of the stats that I'm going to show you when we look at year over year will seem like enormous changes. They are enormous changes, but also keep in mind the fact that we were down so low in April of 2020, mainly when it came to number of closed sales, and mainly when it came to the number of pending sales. But the average price, median price, wasn't really affected last year at all in April or May when we were in the middle of our shutdown. But I do want to recognize that one of Mark Twain's sayings, lies, damn lies, and statistics. So do want to make sure you take this all with a grain of salt, specifically as we're comparing April to April. So sales price was up 25% year over year. Again, that's not because we were shut down and because prices had dropped, but that's because we have low inventory and prices have risen over the last 12 months. Median price, $292,000, up 17% year over year. Days on market are down to 37 days versus 56 days last year. Obviously, closed sales up 36% to over 35,000 closed sales. Our months of inventory dropped from a 3.3 month supply last year to a 1.3 month supply right now. Our pending sales are up 50% year over year. So that's pending sales. You got to love that, because that's our closest leading indicator of what closed sales will be as we close the month of May. And our total active listings, and this is the part where I told you all of those 13 different things that have combined to create this inventory situation. But our total active listings are down 54% year over year. And people had started to take some of those listings off in that April and May timeframe. So this is all about the fact that we've sold 10% more than what we had previously sold, and the fact that people are pulling back on putting their houses on the market, and all the other things that have disrupted our inventory. Now, 2021 year-to-date sales are up 16.4% versus last year. And the average price is up 25% versus last year. So it's going to be a very strong year for us here in Texas. And I'll go ahead and break down again the 4 major markets in Texas. We'll start with the first one, Houston, where the sales price was up 20% year over year to $372,000. The median price up 18% year over year to $295,000. Days on market dropped to 48 days. Closed sales were up 24% year over year to over 9,300 closed sales. Months of inventory, probably the lowest that we've ever seen it in Houston, at 1.4 months of inventory. I want to break that down as we talk about this. So let me see if I can stop sharing for the moment, so you can kind of hear or see me. So months of inventory. All of you guys are probably familiar with days on market. I do want to correct it a little bit and just say that a lot of people think that's the days it takes to sell from the time it's listed, put active, to the time it takes to sell. It's actually not. It's the time it goes from active on the MLS to pending on the MLS. Now, after it goes pending, it typically takes another 30 to 45 days to be able to actually close on that deal. So just want to make sure you guys are really clear on what that means as well. Now, months of inventory, what that is it says if we stopped listing houses today, based on the buyer demand that we've had over the last 12 months, how long would it take us to work through, meaning put under contract and close, all of the active listings that are on the MLS? So we're seeing those numbers in the below 2 range throughout Texas right now. And you may think, okay, well, what does that mean? Well, I'll tell you what that means too. So they say, well, our market equilibrium over the last 40 years has been about 6 months of inventory in Texas is what we've been at on average. And they say really anything below 6, seller's market, anything above 6, buyer's market. And the seller's market's really kind of in that below 4 range, and buyer's market's probably in between 6 and 8 range, but just kind of give you an idea of where they head off. So when I say, for example, in Houston, I'm going to go back to my screen share again. When I say, let me see if I can get back to that. When I say that our closed sales, give me just 2 seconds. Let me get this pulled up all the way. When I say our months of inventory is only 1.4 months of inventory in Houston, really that's not just a seller's market, that's a seller's market on steroids. Again, considering that our 40-year average is about 6 months of inventory. So that's one of the reasons too why we're seeing these huge increases in sales price. Well, there's no inventory. And we're also seeing these pending sales, check out that number, up 72% year over year. Now, again, we're comparing April of 2021 to April of 2020. And remember what happened in Houston last year. Oil and gas prices, the crude oil price per barrel actually went negative because they didn't have a place to store it. So Houston was more than a little freaking out this same time last year, even more so than some of the other major markets around Texas. So again, take that 72% with a little bit of a grain of salt. But know that it's even significantly higher than what we closed in the month of March. So April's going to be a strong month for us. We're going to see that same distribution in terms of all of our sales jumping up: April, May, June, July, etc. Total active listings in Houston down 43%. These are very much in line with the fact that we're seeing such low months of inventory here as well. And our year-to-date sales data for Houston is up 24.4% year over year, and our average price is up 12% year over year. So these are great and really strong numbers for Houston. Now, the next market is the market that has the lowest inventory of all of the major markets in Texas. So if you guys have a guess of which major market in Texas has the lowest inventory by far, and probably the highest sales jump by far of all of the major markets in Texas. I'm curious if you guys want to just type that in, tell me what your guess is before I go to it. And I'm going to go to it in 3, 2, 1. That would be the Austin market. And guys, there are no typos here. I can tell you I checked it twice because I myself found it a little bit unbelievable when I was looking at that average price increase up 42.5% year over year. So all of you buy and holders, me in Austin, this has been a beautiful year for us in terms of watching the values of those rental properties go up, and the values of even your fix and flips go up in a much shorter period of time than what we would otherwise see. So the average price in Austin, $573,000. The median price in Austin up 42% to $460,000. Days on market, an unheard of 17 days versus 43 last year. And 43 last year was still incredibly fast. As you can see, even our months of inventory last year was 2.1 months of inventory. It was already a seller's market. Right now we have 0.5 months of inventory, where the historical average in Austin for the last 40 years has been about 6 months of inventory. And because we have such low inventory, again, that's driving all of those prices up. Last month, we saw a 37% increase in year over year sales. to just over 3,600 units. Pending sales up 40% in Austin. So we're going to have another strong month. But again, I'm a little concerned we're not going to be able to keep up this momentum. And the reason is because there's hardly any active listings, right? So over the last 6 months, we've seen something that we've never seen in probably the history of real estate since we've been tracking it in terms of active sales and pending sales. And that is the total number of active listings in Austin is actually less than the total number of pending sales, and is actually less than the total number of closed sales last month. It's down 70% year over year. We just can't make enough homes, right? Elon puts his hat on, says I'm a Texan, and then there you go. There's just no more houses left. And Elon is even telling, Austin, hey, you got to make some more houses. It's like, well, I don't know if we can make that happen as fast as you can get a rocket ship up in the air. But we're certainly doing our part as real estate investors to add inventory to the market. But that's one of the reasons why we're seeing year to date that average price up 32% year over year, and the sales volume up 14%. So at some point, that governor on the year over year sales volume is going to be hit as we just run out of listings, and we have very quickly run out of listings. A half month of inventory means literally if we stop listing houses right now based on the buyer demand that we've had over the last 12 months, we would run out of inventory in 2 weeks, unheard of. Let's look at the San Antonio market. Sales price was up to $317,000, one of the most affordable large metropolitan areas in Texas. So San Antonio and Fort Worth are some of the most affordable ones if you're looking for lower price investments. Now, that doesn't mean lower price is better. Still, you got to look at your numbers. Is it a deal versus what you're purchasing it at? But San Antonio went up 15% year over year. Median price up 12% to 268.5 year over year. Days on market, very fast for San Antonio, 45 days. Closed sales up 16%. Months of inventory, very short, 1.4 months of inventory. Pending sales are also up. Active listings are down 43% year over year. And year to date in San Antonio, sales volume up 11.5%, average sales price up 13%. Now let's go and look at the other huge market in Texas, Dallas and Fort Worth. So this is the combination of the 54 county North Texas area. So we're putting it all together. Dallas County, Tarrant County, Denton County, Collin County, and the other 50 counties that make up this area. We saw an average price increase 21% to $393,000. Median price up to $312,000, up 17%. Days on market, a very fast 28 days on market. Closed sales up 27% year over year. This is a flame, by the way, just in case you were wondering, on fire. 1.1 months of inventory, so very close behind Austin in terms of having such little inventory. Look at where Dallas was the same time last year, 3.9 months of inventory. So it's had the most precipitous drop down in terms of months of inventory. Pending sales, again, our closest leading indicator of what closed sales will be next month, up 26%. Total active listings, this number is almost the same as pending sales. So it's not as high, it's not as strong as, or not as reversed in terms of that curve as Austin is, but still pretty high, down 68%. And the year-to-date sales up 10% year over year. Median price up 14% year over year. So really strong results for the Dallas and Fort Worth market. And guys, I think my time's coming to a close right now. So I want to just go ahead and offer again to let us help you with your personalized plan. So we're going to give you a free blueprint, and I already have it out to the Real Estate IQ staff, so you get a PDF version of it. But also want to make sure you get a personalized session with us to help you work on your investing plan. So if you want to get more information from us, head on over to askmeaboutinvesting.com. Happy to work on your personal plan. We've been helping members of the Real Estate Investor Association at Texas REIAs, ever since we started investing back in 2003. So love to offer that as a service to you guys and give you kind of the behind the scenes and help you work on what your personalized blueprint looks like. So guys, I think my time might be up. So a big thank you guys for joining us. I'll be in one of the networking sessions a little while too. So thank you, Becky, for having me. Thank you, Real Estate IQ, for allowing us to interact and be together even when we're kind of apart right now.
Thank you very much, Shenoah. I do want to say there is one question that we had, and that is, do you think that some of the supply shortages could also be due to the eviction moratorium? If there are people that want to sell but can't because they have somebody in the home and they can't evict them?
Probably, but yes, but probably very little. I mean, in all of the government activity, whether it's the foreclosure moratorium or the eviction moratorium, are contributing. But from on my personal side, for all of my rental properties, every single one is rented, every single one is paying. If you look at the results for commercial real estate, you'll find that their collection rate is about the same as it was 2 years ago, is about the same as it was a year and a half ago. So while there are, anecdotal stories of people who really are not paying and are getting helped by the eviction moratorium, I don't think there are as many as we think there are. If you look at our employment rate or our unemployment rate, we're not as low as we were going into this. But I think some of that, and we've heard some news about this, is people just don't want to go back to work per se because they're being paid in some cases to not go back to work, and it feels pretty good, right? But I think most people who want a job, yeah, you can get a job. The only people who are unemployed are, I'd say for the most part, people who don't want to go back to work. That's an exaggeration, but you guys get where I'm going.
You're right, and I've heard the same thing from other investors that all in all, their tenants are paying their rent, and they're working with them and making it work.
Yeah.
All right, awesome. Thank you so much.
Started though, for the properties that we had that were not rented, that we were putting on the market last March, April, and May, what we did is we said, if you want to pay 6 months in advance, we'll give you a 30% discount, because we wanted to get through this issue. And then if you want to pay 4 months, a 20% discount. If you want to pay 2 months, and a 10% discount. So that's how we managed our risk there. You don't have to do it now. It's all working now.
Great. Thank you so much, Shenoah. That was some great information. All right, we are going to our first networking break, which will go until 11:40 Central Time, which is almost 20 minutes. And so once you get there, you can choose to go to any of the tables. Shenoah will be at a table. Our sponsors, Real Property Management, ILS, will have a table. We have a table for Latinos in real estate, if that fits you, and a table to learn more information about Real Estate IQ product, for example. So feel free, again, to join any table you'd like, or go to the speed networking and try that out.